Hi, everyone. Welcome to another November webinar. We have 4 webinars this month. This one is CPD accredited for 1 hour for Ontario only. So after this CPD, you can send us an email about your attendance and also let us know that you attended it for a full hour, and then you can go to the LSUC website and register and get yourself the 1 full CPD hour. Now, what is this CPD all about? It's about the bookkeeping compliance. We'll talk about how simple it can be, if you understand the basics. Some housekeeping, I'll take questions at the end of the webinar for 10 minutes. We kindly request you to change your name from whatever you are, viewer number 3 or 5, to whatever your real name is, so that Praveen can actually note your name as well. For audio, look at your chat window. Praveen is sending information how you can dial, and we'll take it from there. So let's get going. So the agenda is we'll be talking about bookkeeping guidelines. What are some of your options, in terms of how to do things and how the Law Society actually asks you to maintain them? Why are they asking you to maintain certain things? And we'll talk about reconciliation. We'll talk about some useful things like C-Book. We'll also talk about other deposit slips and 9As and all the other important documents that you need to maintain. We'll spend a few minutes on what we call the seamless way, should it take you a lot of time, or if you do things the right way, can it be much shorter? And finally, we'll talk about benefits of using a legal accounting software, compared to other forms of maintaining this document. So, with no delay, let me get into the first slide. What are accounting systems? What exists in the market today? And what is so special about legal accounting? So let's talk about it one by one. So I picked this straight from the Law Society's bookkeeping guidelines. Right? It's page number 5 out of the 107 pages that they have, and they talk about various types of systems. Now, what is accounting? Let's look at it. Why we need to do accounting, and how do we maintain bookkeeping at the end of the day? Now, as a legal firm, whether you're a practicing lawyer or a paralegal, there's a lot of money that moves in and out of the business. You're raising invoices, people are paying you, you're getting retainers, you're paying for several charges like court fees and all that stuff, and you're raising disbursements and getting paid. Now, what the Law Society is trying to enforce is they're trying to keep your practice sane by following some very strong bookkeeping guidelines, so that you can actually at the end of the day be accountable for the money that's coming into your business and going out of the business. There are several benefits of doing that, right? One, month on month, you exactly know, just bank is not speaking the truth of the dollars, right? Bank statements obviously tell you what came in, what went out, but accounting for what is actually happening gives you a lot more insight into what that money is for. Rather than just saying the trust account has $50,000 in balance, you now know who are the clients who contributed to that $50,000 as balance. So those are some of the key elements that you benefit by using an accounting system. The first simple accounting system that the Law Society recommends to do is what they call the manual double entry system. Now, it's a simple, inexpensive way. So basically what you do is whenever there's a transaction, you record it in 2 entries. So for example, if somebody gave you a $1,000 retainer, you will have a sheet or an Excel sheet for basically bank, and you'll have another Excel sheet for just your credits. So you will say you will debit it into the bank, which will match with your bank account, and then you will credit it into a liability and say, hey, this person gave me $500 or $1,000 and I haven't done the work, and that's what you're actually. So manual double entry is for every transaction that there's a debit and a credit, and you will maintain them in 2 separate Excel spreadsheets, right? And that's very simple, It's inexpensive to maintain because all you need is Excel, and you can keep managing them. The primary disadvantage of doing that is it's very time consuming for a large number of transactions. It's manual. Concept of subledgers. So at any given point of time, you cannot tell me in that $50,000 of balance who it belongs to. And because you're maintaining it as spreadsheets, there can be a lot of arithmetic errors. The second kind of system is called the OneWrite. In OneWrite, again, it's simple and inexpensive, but then this time you're doing a little bit more than a manual double entry. You're maintaining subledgers. When you maintain subledgers, what you do is not only you associate money to a credit or a debit, but you also say who actually gave this money and what that money was for. And the subledger tells you like the matter number and client ID, so that way you can track that. Now again, very time consuming, even more time consuming than the manual because you're maintaining the subledgers, very, very highly arithmetically error prone, right? That's why you should stay away from one of these two. Spreadsheet softwares like Excel, they do a very good job in maintaining this because they can provide you some form of automation with respect to computation, but it requires a lot of training. It's very, very number crunchy. It's very hard to maintain. And then the amount of money you would have saved in not buying accounting software, you will lose it all by just manually managing it once your business actually grows. The fourth one that the Law Society actually recommends is a general accounting software. If it's obviously there's huge issues in this because time is very big on these ones. Now, when you come to general accounting softwares like say QuickBooks or FreshBooks, it does a lot of automatic calculations. It does subledgers. It produces financial reports. The problem is it's not designed for trust accounting. It's not, and it's very complicated as well, basically because it's accounting. So as soon as you enter, the accounting framework, the software needs training. It's not suited for trust accounting, so that means you have to specialize your accounting, curtail it in a particular way, and manage. You need to almost become a qualified accountant to actually do that. Then comes the area of legal accounting softwares. Now, there are two kinds of software. There are several practice management softwares available in the market, right? But only a few of them combine practice management and legal accounting. The reason why the two are not the same, they look the same. They say, oh, practice management software, I'm going to go ahead and buy one. That's one aspect of practice. The second aspect is legal accounting, because at the end of the day, when an auditor is in your office auditing your accounts, they are looking for this legal accounting entity. And, it's very specifically designed for trust accounting. There's a lot of automatic calculations. It prevents you from having trust errors. It posts subledgers. It does financial reporting like the general accounting software. And so some of them are expensive. They can go into thousands of dollars, and they're a little complicated, basically, because they're doing something very specific for the legal industry. So just to quickly summarize for some of the late comers, manual double entry, OneWrite, and spreadsheet softwares are inexpensive, but they're very hard to maintain. They consume a lot of your time. General accounting softwares are a good step in the right direction, but they're still not designed for legal accounting. Legal accounting softwares should be the right choice for this industry, so that you can basically take advantage of all the features that they have for accounting, and also manage your business in a very, very, very seamless way. So let's now go into the details of what are some of the documents that the bookkeeping guidelines actually ask you to manage by, and why should you manage them. So we're going to look at a classic example here of what is ledgers, and we'll flow through an example to see how trust and general ledgers are actually being managed. And this very example of Peter Piper Corporate actually walks you through that example. So here, for example, on 5th of July, Peter walks in to your building, and he wants you to retain you as, for a matter called corporate. So when you create a ledger, you basically have to say, on 5th of July, a retainer was received for the corporate matter, and you negotiated with him $565. You were smart. You said, oh, I know I need $500 for this matter, and $65 is HST, so you negotiated a $565 retainer. And he gave that to you, and you deposited that into your trust account. So in your trust ledger, you'll put this line item where you will say, on 5th of July, you basically created this table for Peter Piper, retainer, 565, and the balance is 565. Now, on going further, on 12th of July, you basically raised an invoice. You raised an invoice saying that, Peter, the work is complete. It's $500 and $65 is the HST. Now, when you do that and you raise an invoice, that is the entry that actually goes into the general account. So the retainer went into the trust account as a ledger entry, while in the general account, you now put an entry saying fee 500, 565, and that got actually entered. Now, going further, because you did that on 12th of July, any time after that, because you know there's 565 left in trust, you can actually go ahead and do a transfer from trust account to general account. And that's what happened here. Transfer to general for that particular invoice number 2, you did a transfer, and the transfer was a withdrawal. So 565 became 0, and the payment on the account happened in the general side, and the balance owed by Peter was also 0. So here, on 5th of July, you owed Peter 565. On 12th of July, Peter owed you 565, but then the two matched out, and both of them became $0 at the end of the day on 14th of July. That's pretty much what a ledger means. A ledger is what's going in and out in trust, what's going in and out in general. That's all it is. Now, imagine doing this for a large volume of clients in an Excel spreadsheet, one by one by one. That's going to take significant amount of time. And that's where legal accounting softwares are very smart, where they can actually bring in this feature at a very, 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 very low cost. So I'm going to now quickly jump, and show you how to do this. Basically, an example in our software on how this whole thing can be maintained. So we'll take this exact same example. Obviously, we'll not use Peter Piper. We'll use some other dummy client, and we'll do the exact same example of July 5th to 12th to 14th flow, and we will show you how this can be done. So I'm now loading the software. I'm going to now go into contacts, and we'll create a contact. This time I'm going to not create Peter Piper. Maybe I have Peter Piper already. Yeah, I do have Peter Piper. So let me create another contact. So this one is Peter Viper. I'm not going to fill in all the details of company and the source of contact. Maybe he came in, as an external reference. You can hit the save button. And let's follow the example as in the Law Society's example, where you're going to actually take a retainer. So let's create a matter. They want to call it Viper. There you go. Matter. It was a corporate matter, and I'm going to call it corporate, and we'll give it a description later. Just hit the save button. That'll automatically create the file number. And on 5th of July, got a retainer. So we can say new retainer, go to 5th of July, and say $565. Maybe it was received as a check, so you can say check number, whatever, and apply, and that's done. So that kind of, you did this in the matter. When I hit the question mark and I look at the trust ledger, that should pretty much correspond with what we have here. So 5th of July, retainer, Peter Viper, check number that 565, that's the balance in trust. So this is the difference between actually managing it as a double entry, the way a law society tells you, and doing it in a legal accounting software. You actually entered it in a matter as a retainer, and we produced that ledger rather than you actually managing that ledger. Now, let's go to the next step, which is actually do the work and create an invoice. So I'm going to actually say, let's say I'm going to do a pre-tax flat rate for, so let's say it's $565, because I know that's what I got. I'll immediately divvy it up that way. I can add it to the matter and save it. So that's basically, now I put that. Now I'm going to basically generate an invoice on 12th of July. And this is normal standard invoice creation process, right? Because you just created an invoice on 12th of July. Now, when you do that, let's now look at the general account. So I'm going to now go back. Okay, that's our beautiful invoice here that we're going to send it to Peter Wiper, and we can say flat rate, $565, and we're going to tell him like, hey, he owes you nothing because we have money in trust, so everything is good, right? We're going to do that. It's all done. Now let's go back to compliance and look at the general ledger. That should now match what we see here. Again, 12th of July, legal fee, invoice number, 565. It's all matched out. Okay. Now, once we have done that, let's now actually go ahead on 14th of July, do a trust transfer for Peter Piper. So I'm going to do a question mark again. The legal accounting software is smart. It knows that, hey, you can do a trust transfer. So let's do a trust transfer. Now I'm going to now pick that, and I'm just going to follow the example here. 14th of July was when it was done. And so far, what you're doing in the legal accounting software is absolute common sense, right? Obviously you are in the matter. You accepted the retainer. So just to quickly recap, I clicked on this button. I collected the retainer. I went in the matter events. I clicked on the action button. I exactly knew because it's a pre-tax flat rate. So I just clicked on that and I put 565, and it even calculated for me 500 plus 65 because I was smart when I obtained the retainer that much, and I did a trust transfer. So now when I hit the question mark, the software tells me no funds in trust, no client owes. Now let's look at the ledgers, because this is exactly what the Law Society is going to audit you for. Here you go. 14th of July, 565 invoiced and disbursements. Pretty clear. $0 in trust. Here you go. The ledgers match in trust. Now the ledgers match in general. So legal accounting software really take it to the next level. You don't maintain ledgers. You just do what you need to do in the matter. It translates that into ledgers, and everything works. So now let's go back to the next slide, and this is where the true advantage of legal accounting software comes. Because for that particular example of Peter Piper, we recorded 4 events. July 5th, 12th, and the 14th, we recorded 2. Now, the Law Society also cares about journals. For Peter, there will be 4 journal entries. So on the receipt, you need to have July 5th, Peter, that 565, and the check number. You need to have this receipt journal. Then on 14th of July, when you actually did the transfer, you need to have a general entry saying 565. That was check number 1 that was actually received. You need to have a journal receipt entry. And then on the trust side, on the 14th of July, you also need to have another entry saying that 565 was actually moved from here to there. So here in journal side, you now need 3 entries. July 5th entry, the July 14th entry has to be entered at 2 places. There's no July 12th entry because that's just an invoice. There's no money transaction on that day. If we go back to the software now, and we go to accounts, and I'm just going to hit document generation, and I'm going to do compliance. So it's I'm going to show it right here. So let's look at the first one, which is trust receipt journal. So I'm going to download it, and I'm going to just show it. You will see here Peter Piper. Peter. Oh, I didn't do the monthly, so let me just again. Sorry. Compliance. Monthly. Show. So that is basically the entire November for trust. We are going to do a trust general receipt. We do a show only. Here, you should see the trust transfer for that same matter. So in that example, as you saw for Peter, on July 5th, we saw 565. So let me go back to the software. I have to look at July. I was looking at November, so that's why I was not seeing the transaction. Let me go back to accounts. I'll click on compliance. I'll say download the trust receipt for monthly. And let me look at July. Show only. And now, I didn't even record this. It should just come by the very nature that we entered it. For some reason, I'm having, my internet is a little slow, but I download. And I should see it on 5th of July. You should see Peter Wiper right here. So if I keep that document next to this one, July the 5th, Peter Wiper, corporate, the matter number 565, and the check number, pretty much matching with what the trust receipt journal has to be. Now, we didn't even enter this. This just got created, and that's the fundamental difference between a legal accounting software and you doing it manually. Similarly, now let's look at the trust disbursement journal. That's here, trust payment journal. Let's do a download. Again, we have to remember that we have to go back to the month of July. See Peter Wiper. I'm going to go there, and I'll do a show. And Peter Wiper should be there on 14th of July. If I go down, 14th of July, Peter Wiper paid Roger Moore $565. Again, we didn't do that. We didn't enter any ledger or journal. It automatically got done. So again, a key element and a key advantage of doing it this way. So let's now go back. 1, 2, 3 entries in ledger, or 4 entries in ledger, sorry, and 3 entries in journal has to be managed for one file. When you actually do it in a legal accounting system, all you did was you put it in the matter, in the retainer section, you put it here, and you raised an invoice, and all we did was we just went to the account and just generated reports, and everything actually fell into its place. Now let's look at the next entity that the Law Society is actually asking you to maintain, which is the reconciliation statement. What is reconciliation statement? Why should it be done, at the end of the month? Now, In a legal accounting software, you're basically entering everything that is actually happening in the bank. Like, you're entering when you received the check, when you actually wrote out a check, when you did the trust transfer. Now, there is a possibility that what you actually wrote or managed in the legal accounting system is a little bit, out of date with respect to what is happening in the bank. Like, for example, you deposited a check on Friday and you put it in the legal accounting software saying that you deposited on Friday. The check only got cleared on Monday. So there'll be like a discrepancy of about 3 to 4 days on between the bank account and this. What reconciliation actually does is it brings the two together. So at the end of the month, when you do a reconciliation, you're basically checking off all the entries that you've done in your legal accounting software against your bank statement, and you're actually making a report that tells the law society that you reconcile. So let's look at it from what they're actually saying. If you look at a reconciliation statement, there are 4 parts to it. The first part is what you have in bank. This is a manual portion. I mean, you look at your bank statement, you exactly know what's your bank balance, and you just write it there. Then you need to write your outstanding checks, because there could have been several checks, like a mortgage payment or even a refund or something you could have written, and somebody could have not cashed it. So you need to basically list out all your outstanding checks. Then there could be outstanding deposits, because, as I said, you might have walked into a branch on a weekend and actually deposited using an envelope, but it's not actually shown up into your real statement yet. So there could be a few outstanding deposits, or maybe you received a container on the morning or late in the evening on Friday, and you only went on Saturday and deposited it. So so there could be a difference there. So those are all outstanding deposits. Most likely, there should be zero, but banks do make mistakes. Like, for example, there might be a clearing error or some kind of interest account. So you need to put all your errors here. There could be plus errors or negative errors based on whether they give you interest or they withdrew something wrongfully in your account. So you need to put that. And you basically let that, add that, and then add that. And that gives you a total of what is actually your reconciled mixed trust balance. Even though the bank statement says that, your real trust balance is what this is. That's step 1. That's a manual process. You need to basically do that, inside your software. Then what you do is you come here and you basically do your outstanding checks. You basically say, hey, these are all my outstanding checks that actually added up to this $39,476.70. So basically, it's as simple as just, when you are doing step 1 itself, you will be doing step 2. But, the Law Society has clearly broken it down into 2 steps. Like, this is the bank part, and then this is just the listing. Now, the third one is actually coming from your accounting system, because this balance that you have in the accounting system is broken down as a subledger per client. For Peter Piper, how much is the balance? For Susan Silver, how much is the balance? Terry, how much is the balance? So you kind of have broken it down here into multiple entities, and that adds up to $1,715.30. Then what you do is the step 4. In step 4, you basically copy this number here, and then you copy that number here. And if the two are identical, you basically reconcile. You said, like, hey, I kind of looked at my bank, and this is what I believe should be the balance after I do all my adjustments. I kind of looked at my accounting software, and this is what is my balance, and the two are matching. Now, there's a key element that's very, very, very important here. In all these 4 parts, to get these 2 numbers as close as possible and get this as minimum as possible, what you need to do is record things exactly when it happens. For example, if you deposited a check on 5th of July or 4th of July, you want to record in the accounting system as well that it was deposited on 4th of July, not recorded as 5th of July and actually post the check on 18th of July. There you will see a discrepancy actually happening. So to avoid trust discrepancy, one of the most important steps is recording bank statements right when they happen. So that's basically a fundamental to maintain a lot of, to maintain least amount of errors when you do your reconciliation process. So actually, just to summarize, the activity is 4 parts. The first part is actually, recording the bank statements and the balances. The second part is recording the outstanding checks. Now, I would actually say step 2 acts 2 parts, even though the Law Society does not ask you. You're listing out outstanding checks, you should also be listing out outstanding deposit. I know they don't have it in their bookkeeping guidelines, but that's a good habit. Because at the end of the day, when the auditor is asking you, what is this 250, you should be able to say line item by line item, hey, this is check number 5 that I haven't deposited. This is check number 10 that I haven't deposited, adding up to 250. That'll be a good thing. Like, for example, in bank error, they've been very clear. They exactly tell you why the bank error happened. Like that, explaining outstanding deposit is also a good step. So I would expand step 2 into 2 parts. Client trust listing basically comes out of what you have in your accounting software, and the last is basically what we call the trust comparison. So the 4 steps are recording the bank statements and balances, recording the outstanding checks and deposits, and recording the client trust listing and trust comparison. Yeah. Once again, I just want to thank this viewer 27 for pointing out the July mistake. So it did take me some time to figure that out, and I was struggling in the software. I appreciate you bringing that up. Now, what is fee-book? Fee-book is basically another document that the Law Society expects you to manage for just doing what you did. So again, for Peter Piper's case, you need to maintain the single line item here saying that you did that. Now, if you go to the software, if you just did document generation, fee-book, monthly, I'm going to remember to go to July this time, and just do download. I should have it exactly in this format, the July, and I should see the Peter Piper statement that I should be able to download. So again, key elements are the columns, the date, the client, the description with the invoice number, what was, and then breaking it down into fees, HST, GST, PST, based on what province you are, and the total. So in our case, on July the 14th, we should see Peter Piper, $565, $565. So that kind of brings out the whole notion. Okay, so again, you don't generate these documents. In legal accounting software, it's already there, so it just gets generated. Now, what are other compliance documents that you need to manage? Now, clearly here in this trust transfer that I did on July the 14th, kind of hurried it through. But let me kind of pull last 6 months. I'll go for Viper. If it was an electronic fund transfer, what will happen is the Law Society wants you to maintain a trust transfer requisition. Now, the trust transfer requisition is basically a hard copy of what actually happened with respect to the bank transfer from trust account to your general account. So let me basically find Viper. There it is. I click here. And I know I kind of wrote that as a check, so I'm going to modify that as an electronic fund transfer. And I will download Form 9A. And that's, you can put your trust account there. I'm just going to put a number, TD Trust. Then you can put your general account there, TD General, and download. Now, when you do that, what will happen is this document is exactly what the Law Society wants. Electronic transfer requisition, your requisition number, who was the client, how was it transferred, and then your signature, or maybe your assistant did that transaction, like his name or her name and her signature needs to be actually maintained, and, everything has to be stated. Okay? So that's Form 9A. Again, you don't have to take a document and fill all that stuff. This one actually just does it for you. And, that's very simple and straightforward. Now, going back, again, a deposit statement. Like, for example, you took that $565. That one was an easy one because it was check. But if it was, let's say it was a cash, you need to do a deposit slip. So, a good accounting software should have deposit slips. Where you can say what is the date when that happened. So July the 5th again, 565. Let's say it was actually received by cash. So you can say 565, and you can say received from Peter Piper, and the description was for the corporate account. Apply it and download this. Now, what this can enable you is when you actually walk into the branch and actually do the deposit, you can just go to the teller and just get his or her stamp right away. Like it's all filled out here. Like, you just have to fill in the cash. Like, you can just say 500, 10, and this. You just fill in those details and get your stamp, and you're done. So, again, another key compliance document can very easily be managed. Now, client verification document also is a compliance document. Like, many softwares offer that right inside their software. So you just go to the matter in this case and just click on document generation and say, client ID verification, download, and it's a pretty straightforward document where you need to take something like a passport or a driver's license. And if you had filled in everything, it would have actually filled in everything and then, taken it from there. So in this case, I was not in the right matter. I was in Peter Viper's matter. I would have got Peter Viper's information, and I did the client ID verification. There you go. There you go. Peter Viper, corporate. You can just say driver's license was required, other information, and just sign it, and you're done. Now going back to the slide, duplicate cash receipt. Again, I didn't produce one, but, going back to the matter, we received a $500 receipt. So you can just go back here and say retainer receipt, download, and your retainer receipt should have one key information that the retainer receipt has to have in the compliance document is, especially if it's cash, is it has to have the person's signature. Their signature and your signature is mandatory. If it's cash, in check you can just have yours, and you can even brand it if you want, because it's going to remain with your client and he will have all your information. So let's go back to the slide. How much time are you spending on all this whole process? The complex part is not just managing the double entry. The complex part is making sure that for a single touch point, you exactly know what you need to change and where you need to change. That is the very complex part, right? Some entries, need to be maintained at just one, ledger and one journal. Sometimes, as you saw, like it spreads out its way into several places. Like, for example, the fee book, the general ledger and the trust ledger, it gets spread out sometimes. Sometimes the same information, as we saw, got recorded several times. What was there in the ledger was what is there in the journal, and what is there in the journal was exactly what is there in the fee book. So this can cause a lot of confusion, especially if it's not you who's doing it, it's your assistant who's doing it. They can make mistakes, and this is where the real problem comes. So generally, I introduce the concept of seamless accounting right here, but for this time in the CPD, we used our software all along the way to show compliance, how you can actually build it. And that's actually what seamless accounting is. Like, the practitioner, you and your assistant and your team work on what we call matter management. You work your way into your matter management workflow. A workflow is basically you get the retainer, do the job, put the disbursements, do what you have to do, and just invoice and do a trust transfer. And because you did everything exactly when it happened, reconciliation is a very, very, very simple task. And what makes reconciliation very simple is the fundamental thought that we recorded the data when it happened. Like, if the bank record and your record matched as close as possible in terms of date, reconciliation is a piece of cake. And second thing is automatically maintaining ledgers, journals, and the matter workflow between the two keeps your bank records and your accounting records very close to each other. And that's where you save all the time. The benefits of a seamless accounting software really comes out. Now, it's one aspect to actually collect all the data and showcase and make sure that it's all compliant. That part is what the auditor is actually looking for. The secondary aspect of basically bookkeeping is a review. Like, let's say you're traveling, to court and you have a lot of downtime. What you can do is you can just review this data and say, hey, you know what? This person gave me $1,500 and that check hasn't cleared. Maybe it's time for me to make that phone call and find out why that check didn't clear. Or in some cases, let's say, your downtime was on 12th of July or 13th of July. You'd exactly know, like, oh, there's a $565 balance in trust account for Peter that I haven't transferred? And then on 14th of July, you took the action to actually transfer it. So, the biggest advantage of maintaining bookkeeping is it gives you that external view of how you're doing with respect to your business. Now, this is very straightforward with respect to your client. What about office expense? How do you manage that? How do you bring all that into your accounting system and say, at the end of the day, it's good that I made all these fee book. What is my expense book looking at? And are the two actually matching? If I take the fee book and if I take the expense book and I do a P&L, a profit and loss statement, at the end of the day, am I at profit? Is my business really healthy? Am I able to pay all my staff properly and still manage a good business? That's the key value that a good bookkeeping software can actually bring. And that brings us to the next section, which is what is the key benefits of accounting softwares. Some of the key benefits of accounting softwares is you recorded the events when they happen. There's a very clear enforcement, as you saw in the software, that it did not even allow me, to do the wrong thing. I had to record what happened at the right time, right? Financial recording and the bank records are kept so close that reconciliation becomes a very simple task when you have a legal accounting software, right? And the key is if there are good rules that are built into the software. Like, for example, let's say in this particular example of Peter Viper, I decide to do a trust transfer. So I click on action and I say, I want to do a trust transfer. And I click and it comes back and says, you don't even have anything to transfer. See, I can't even click. If I click here, it says $0. You can't even transfer. That's great, because if you didn't know this, you might again go and transfer another $565 thinking that you did not transfer. And now you've done double transfer. Now you have to go back to the bank and fix all that stuff. So having a good workflow that prevents you from trust error, like telling you there's no invoice pending, when you click on it, it says there's no trust funds, the client owes you nothing. These indicators are key to the business. And highlighting them in red. If you remember, when there was trust funds to transfer, we actually highlighted and said, hey, that's red. You got to take an action now. So doing all that stuff is what the key advantages of a good legal accounting software. And finally, there are 4 elements that are very fundamental to accounting. First one is compliance. So as I told you, if you can go into accounting and click that one button called the compliance button and bring out that entire flow of what is actually required by the Law Society and download them one by one, that's great value, in my opinion. That's where the benefit of compliance actually comes. So you just click on this compliance. These are my 9 documents that I actually need to download: the trust ledgers, the general ledgers, the 4 journals, the fee book, the expense book, and the reconciliation. So that compliance is the biggest benefit of a legal accounting software. The second benefit it's about accountability, right? Right now, I exactly know that Peter's matter is all closed. I had money in trust, I did the work, I sent him the invoice, I transferred, it's closed. I can actually go to the software and say, I'm done with this matter, and I can actually say, I'm closed. So that kind of accountability comes with a proper legal accounting software which has good, proper workflow and validation. The next benefit of legal accounting software is analytics. Now, analytics is trying to tell you not just what you know or what you are assuming, trying to tell you more than that. It tries to tell you what you actually don't know about the business. For example, if we go into our analytics section, and you basically I'm going to go back to individual analytics. Then I'll do comparative analytics, okay? So if I go into my analytics section and actually look at my analytics, I can do several kinds of analytics. I can do client-based analytics. I can do account-based analytics. So let's do a quick account-based analytics. So account-based analytics, here, one. It's a little slow for me today, but it basically has to tell me all the stuff that I didn't know about my business. Like, for example, trying to compare my trust statements, what came out with my general, and trying to project my month by month. So let's now go into accounts. I'm going to look at my analytics. We look at my accounting analytics. Reason a little for some reason, it's really, really slow for me today. We try and see. And sorry, I'm having a problem with my Join Me and my uLaw, everything running together. For some reason, when I run my account today, it's like so slow. Come back to it in a second when it works. And the last one is obviously ease of use. Like, when it has to work. Like, if you want it to be as simple as possible in your workflow so that you're really not struggling in your work to actually get the job done. So I still have another 10 minutes left. I'm going to quickly recap in the next 2 minutes, and then we will open the floor for questions. So what we covered today was we covered the two basic forms, which is basically the client trust ledger and the general ledger. We talked about how to manage them, how to maintain them. Then we talked about receipt journals for the trust and general. And then we talked about how to manage them for the disbursement journals for both trust and general. Then we came to the next important chapter, which is basically the reconciliation statement. Reconciliation statement has 4 parts: step 1, step 2, step 3, and step 4, which basically the first part is all about the bank information. The second part is all about outstanding checks. As I told you, I would go one more step here, not just have outstanding check, but also have outstanding deposits. Then the next step we talked about is the client trust listing, where we mentioned about how to basically take your accounting information and put it all here into perspective and manage it out as a list, and then add it up. And then we showed you how to actually do a trust comparison between the two. I did get my analytics working, so let's now go back and look at fee book chart comparison. So I'm going to do a quick fee book chart analysis of the month of July, which is the month of October. So let me do, that's July till today. That's my pie chart and my table, my bar chart. And if I did yearly, the entire year, I can compare the two categories. I can say, hey, in the year, it looks like, my immigration was the best, civil was the next. But from July, it looks like I barely did any immigration or civil, but small claims really did all that. Now, clearly, none of this data was collected for analytical purposes. It was mainly collected for compliance, to make sure that the auditors are happy, you're compliant with the Law Society. The advantage of managing that is you can actually pull it through here and compare it. Now, you can also do a very simple comparison of your fee book by category and compare it to your expense by category for the month. You can say, hey, for this month, how am I comparing, my fee book? I'm going to do a quarterly comparison and my expense comparison. So clearly, I know, for this quarter, I've kind of made about closer to $4,000. My expense is really good. I barely had, a $29 expense. So that's really good. I mean, it's a fake account, but kind of gives you a view how much money you made and how much money you actually spent to make that money, right? So kind of gives you a good comparison right next to each other. And you didn't basically put the data for this comparison, but it kind of gives you in the time chart, how things were in terms of bar charts and pie charts. So coming back to the last slide, the key advantages of having a legal accounting software is all about compliance, accountability, analytics, and ease of use. So at this point, I'll take a few questions. The first question was, what's the difference between fee book and expense book? Okay, I can get into that detail. Now, the Law Society is asking you to maintain fee book basically because, as you saw when you did the general ledger, when we saw this, there's this line item here called 12th of July when you actually raised an invoice. It's there in the ledger, but it's not there in any journal. The reason why it's not there in any journal is because that was an activity that was performed on paper only. You raised an invoice. It's not a bank activity. So that's why it's not there in the journal. The fee book actually captures that information. And the advantage of fee book is at a given statement, you exactly know how much fee you've collected. Now, analysis that you can do on that is who's my best client? Is Peter better than Jackie? Jackie is better than Ricardo. You can do that very simply, in your analytics. You can just go here and say, let's do fee, this comparison by client for that same period, and you will immediately know who's your top client. Obviously, this corporate client was the best client. Jean-Paul was the next. Dave Templeton came right next after that. That's a key metrics that you can get from fee book by maintaining, who paid and how much they paid, and you can just use this table to actually do that. Now, expense book is just opposite of that. It basically gives you the expense view and tells you hey, for this particular month, how much expense did I have? So let me quickly do an expense, chart by, not fee, but expense chart by clients, and we do it for the whole. And it tells you hey, your corporate expenses were the highest. And then expenses on clients, if you look at it, Ginny Clare was very high, Gregory was the next, and then it keeps going like that all the way up to, Ian Jackson, or even further. Okay, so that's basically the expense. So the fee book and expense book are just opposite of each other. Any other question while we have this? We have a separate CPD just on reconciliation. In this one, we only just covered it very quickly. Just to show you how reconciliation is actually done, all you do is, as I told you, those 4 steps are the most important steps. You just basically do trust. You basically pick the date. You enter your trust amount. I'm just going to put a random amount here, right? And then you pick your outstanding checks. You pick your outstanding deposits. and just hit the download button, and it should just do reconciliation with no trust, if there's no bank errors, And then, as we pointed out in the slides, comparing step 4, that these two are very, very much done, is the most important step. And the reconciliation statement has to be done month by month. You should not wait too long into the month to do it. You have to do it on the 30th of the month, and make sure that month the bank and your this has actually tallied out and everything is clear. So I'm just opening out my reconciliation statement here. As you see, that's your bank statement, that's your outstanding checks. Then you have all your trust listings, this is the old account. We have all the way from 2015. And then at the end of the thing, I just put some dummy accounts, but, you should kind of just compare the two and say, this is what it is. So if you have any further questions, do let us know. Don't forget to send an email to us about your attendance. We didn't see a lot of people change their names from their viewers, so we would like to know who you are so that we can mark in our attendance. And we do have another webinar coming up next week. It's about reporting. We will only cover reporting in that. We'll talk in detail about, you've given us all the data, how good we can do reports, and what you can do in your downtime to make your business even better. We'll be talking about that. Thanks for attending this webinar. And again, this webinar has 1 hour of CPD credits. Hope you enjoyed it. If you have any feedback, don't forget to give it to us. Thank you. We'll stay online. If anybody has any questions, I can answer for another format.